let's get your trading strategies for the day, for the week, and of course in the run-up to the budget. Dr. cknarayan, Managing Director of Growth Avenues, joins us. Good morning, Dr. Narayan. Good to have you with us. Well, there has been a bit of a jolt for Nifty traders, especially bullish traders, over the past 2 days. We saw that steep fall in the second half of Friday. It kind of got mirrored yesterday as well. This unexpected weakening of the Nifty and its four major pillars, Reliance, Infosys, ICICI and HDFC. Do you think the pre-budget high of 8993 is over? We are not going to scale that number yet again. How do you trade it for the week?
Well, I think markets certainly seems to be taking on a slightly defensive stance ahead of the budget. And if you see it from a trader's angle or somebody who's been an active participant so far, it's nothing out of the ordinary. After all, we have scaled considerable ground over the past several months. And everybody who has been on the long side particularly is sitting on a decent amount of profit. So I don't think the rational mind would really permit one to take too much chances with whatever set of profits have accrued. So it is nothing out of the ordinary to see people take some money off the table. Insofar as Reliance is concerned, I think that is a reaction to the recent developments. But perhaps in things like HDFC and ICICI Bank, etc., you could probably say that there is some bit of very definite profit taking which could be price oriented rather than any event oriented. If you look at the Nifty as a whole, it was having a lot of support from the banking side, which has been lacking over the last 4 to 5 sessions, and that was being sort of balanced out by gains in pharma and FMCG. FMCG continues to stay afloat, but pharma has become a bit mixed. So I think unless other sectors were to really start firing, it might prove a little difficult to see the Nifty, finish in, let's say, in a grand fashion or grand style into the budget day, as it were. But I think I'm not seeing this as anything out of the ordinary. Light profit taking is, I would say, par for the course.
But at what point would you continue to add on positions? Even now, are you adding on, or would you advise people going long on dips?
Most certainly so, because the scenario as far as the trend is concerned is completely undisturbed. So we can expect a pullback if the buying were to withdraw and some light selling were to emerge. Maybe another 100 points on your Nifty. So somewhere around 8650, I would be a happy buyer, because I think the focus on this budget has been high, but then the position build-up seems to be limited. I don't think people are taking too much of a view. If you look at the option positions in the March series, they are hardly anything. They have not even reached the, let's say, so-called normal levels of position building. Of course, we will know across the next 2-3 days if that were to happen. But given the kind of event and the significance of the event, the option positions so late into this month seem to be pretty limited. So I think the market as a whole seems to be playing a little bit of cautious game, which is probably good, because you're not going to have very serious, let's say, disappointed declines if the provisions of the budget were not to meet the expectations of many.
Okay. Dr. Narayan, good morning. So are there any stocks that you would recommend buying into for a long-term investor, given that we've seen some amount of correction in the market? At this point, even post the budget, are there any long-term buys that you would recommend?
I think if you look at it, you have asked a specific question, are there any long-term buys? The cliched answer to that would be to, of course, stick with the large cap stocks, which would not be a bad strategy. But the market, as it were, seems to be slightly split in the way that it is behaving. It's almost as though we have two different markets here. The party seems to be merrily on in the small and mid cap space, and they seem to be completely unfazed about whether a budget is ahead or a Fed meet is ahead, or whether some currency stuff is happening around the globe. Seems to be totally unconcerned in that space, and stocks are hitting 52-week high by the dozens and upper circuits by the scores. So whereas compared to that, the large cap space is moving in fits and jerks. So I think the larger players are a lot more circumspect about the prospects. I mean, if you just take a poll I did in the last week, and I found that out of about 15 comments which were out there in the public domain from all leading lights of the market, 14 of them were very circumspect, saying that the market is in a range and we have hit valuation limits and whatnot. There was just one lone voice which said that the market would actually go up. So that kind of tells you where the mood of the market is as far as the large cap is concerned. But these people are not really present, it seems, in the small and mid cap space, which is having a merry time. So it really depends upon where you want to do your long-term investing. If you're looking at mid caps, they are still flying, and there are many names that you could go there. But if you're looking at large caps, you would be better off buying on a dip.